We're joined here at Post 9 by Taylor Morrison CEO Sheryl Palmer. The stock is up 55% year to date, hitting an all-time high just earlier this month. And as you can see, up about 2.5% right now in early trading. Great to have you on, especially on a day like today. I mean, that last stat that Diana just called out, 43% of new home sales, and that the home builders, the biggest home builders, are filling the void, if you will, to create more inventory and more housing supply. I want to get your thoughts on that dynamic and how this data speaks to that.
You bet. Thanks for having me here today, you guys. You know, with respect to the share and the growing share, and it has almost doubled in the last few years, I think much of that is given the environment that we've been in over these last, let's call it, COVID post years. Where the supply chain got much more difficult, as I think there's been a lot of discussion around the difficulty in building, the time involved, the costs have gone up. I think it's been much more difficult for your smaller builders to compete at the same level, which has allowed builders to take a much greater share. At the same time, we've seen the inventory really constrain on the new sale. The larger builders have continued to grab that share as well.
I mean, we're seeing, and again, I'm channeling Diana here, but we're seeing a doubling of the number of homes sold but not yet started. Points to a big backlog. Labor's still an issue. We have a big jump for demand for materials. Can you keep pace with it?
Yeah, labor continues to be an issue, but not what we saw last year. And materials have, I'm not going to say we're out of, the woods yet, but much better than we were 12, 18 months ago. There's much more predictability back in the supply chain. It wasn't just the ramp up of starts that created, the difficulty over these last 24 months. It was a combination of the incredible ramp up coupled with unfortunate weather in many parts of the country, the reduction in the resin plants, and then honestly just the way the labor looked at the opportunity today through COVID. We just had a lot of difficulty getting people to the job sites. So you put all of that together, and we were in what I would call that perfect storm. So today, as things continue to heal, the manufacturers are really back. And much more predictability. Things that maybe used to take 2 or 3 weeks, maybe take 5 or 6, but they're not taking 16 or 18. There's a couple exceptions in there. But yeah, I think we can.
One thing we talk quite a bit about is the level of factory creation, right? And the Infrastructure Act, the CHIPS Act, and the drain that's putting on labor. Are you feeling that? Do you feel like you're in competition with some of that non-residential?
Absolutely. I think we saw it from commercial for quite some time. I think we saw it from factory. I think we saw it from just pure innovation across the board. But once again, I think that we've begun to solve for that. You look at the employment numbers. Clearly, we know we're in a very tight labor market. But I think the builders have also contributed to kind of the ease of the production cycle today. I think there's a lot more simplification. So I think it's an easier opportunity for people to get involved in the trades, have an understanding and repeatability in what they're doing. We were all doing it so different years ago. There was a lot more, I'm going to say, semi-custom in the workplace. I think we've really simplified the model across new, and I think that's helped the labor environment as well.
As for the shares, is this a currency now that you think you can use to do deals and higher? I mean, how's this working in your favor, the actual share price?
Well, Carl, we've done a fair amount of deals over the last many years, and we felt the scale was quite important for the organization. And so now when I look at scale, I look at, are we in all the right places and do we have the right scale in each of those markets? And I think that answer is yes. So I feel the company's in a much better place with the acquisitions we've done for the last 7, 8 years. Today, it would have to be for the right opportunity. It would have to be accretive. We have that currency available, but that in itself isn't going to motivate us to go do a deal. It's got to be strategically for the right reasons, and it's got to be accretive for our shareholders.